It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And it's your Real Estate Breakfast right across Australia, talking all about your property news and current market conditions, which are changing as the months progress through 2026. We are streaming from Noosa in Queensland to the suburb of Point Cook in Melbourne. And it's a Thursday. This week is going by pretty fast. February the 26th. So is the month. March is nearly here. And I want you to spare a thought this morning for a woman living in a homeless camp north of Brisbane who says that she fears for her children's safety every night. Now, this is a mother of 7 who was denied social housing because her Centrelink parenting payments placed her above the income threshold. She now sleeps in tents with her children and relies on charity support. Under current rules and regulations, eligibility would require surviving on less than $18 per person per day, a figure she says is unlivable. I'd have to agree. 7 children living in tents at night. Now, is that the Australia that we know and love? Let us know what your thoughts are. Of course, you can email us to myrealestatepodcast@gmail.com, or you can send us the voice message, and the link to that voice message is below. Click on the link and then you can start talking. Let's right now take you to Melbourne and catch up with Stephanie Jordan, the founder of Zaralend. And a very good morning to you, Stephanie. Welcome into the Real Estate Breakfast. Pretty tragic sort of a story there. The mum of 7 living in tents and can't get social housing.
Good morning, Craig. Thanks for having me. Yes, it is completely outrageous. Surely there is room in the budget to help people like this. It doesn't seem fair. It's shocking, actually.
Yeah, not good. And I'll tell you a place that we do highlight from time to time, and that is Dubai. The UAE, they do not have any homeless people. In fact, what they do for the local Emiratis, is the government gets them into housing. So not a single person is out on the street. Talking of streets, Melbourne families are waiting patiently for the next potential rate decision and the prospect of repayments rising to about $104 a month on a $650,000 loan. Auction volumes are building with around 1,200 homes scheduled this weekend and more expected next week. Most buyers heading to auctions already hold pre-approval and understand their limits, suggesting more of a measured confidence rather than panic. Yeah, so if we circle back to that, a 0.25 percentage point rise would add roughly $24 a week to repayments on the average loan. How are you finding it in terms of your clients wanting to buy property? They're cautiously being probably more prudent, are they?
Yes, they are a little bit more cautious, but I don't believe the potential $24 a week increase in repayments is going to stop many people, including first home buyers, wanting to get into the market. I haven't really seen any people that concerned about the rate increases. Yeah, I'm still getting a lot of inquiry about buying property.
And is that because the 5% threshold that is kicked in, they've obviously got more room to manoeuvre, but of course at the other end there is a much more higher mortgage ceiling that they're having to service?
Yes, that's true. However, what lenders generally do in the first and second tiers is they add a 3% serviceability buffer and stress test the repayments based on 3% higher than the actual rate. So it would take 12 rate rises of 25 basis points to actually surpass that. It doesn't really affect people's ability to afford their mortgage that much because we've already stress tested the repayments.
It's always a busy place, Melbourne, when it comes to mortgages. You've been working for yourself there now for 7 years in the mortgage space. It's been very, very chaotic, hasn't it, over the last 7 years? What are some of the things that you have noticed in that time?
Oh, I think it's just the roller coaster of rates being slightly higher and then them plummeting all the way down to almost 2% and then them sharply increasing. It's just mainly the rate roller coaster over the last 7 years I've seen.
Yeah, it's interesting because when you first came in working for yourself, that, as you say, the rate was so low, you kicked off a business and you probably thought, gee, how is this going to go? Now, suddenly, the mortgage spike is going up and up and up. Was there a point where you thought, am I in the right business here?
Yeah. Well, yeah, it was a little bit stressful, I think, for clients who committed to larger mortgages at 2% and now the rates are almost 6%. That was definitely a little bit shocking, but I feel like they've come down and I think they might settle in this space for a while.
Yeah, and let's just have a look at Victoria's gains tax debate, which is intensifying because a report released criticises Victoria's gains tax for constraining housing development and economic growth, arguing that appealing it could unlock thousands of new homes, jobs and private investment annually, and it qualifies a potential outcome delivering over 3,000 new homes annually by 2030. Critics say that the tax disproportionately impacts first home buyers and regional families amid ongoing supply challenges, to which there are many. We are talking to Stephanie, and she is in Melbourne this morning. When we come back, we're going to talk about this fully assessed pre-approval. You know, when it comes to heading off to auctions, are you fully assessed? We'll talk about that after this.
It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
Right, let's right now take you to the Gold Coast and catch up with Victoria. And that is so true, isn't it? Just trying to cut out all of the rubbish that we tend to buy. You see a lot of the young folk on the Gold Coast, you know, they're driving the flashy cars. The girls have got the jewellery, so you can see the money is being spent.
I think that unfortunately there is still that thirst, perhaps a huge appetite for having things, you know, instantaneously. So lots of people, not everyone, but lots of people want everything now, you know, with the cars, the luxury goods, all those kind of things that back in the day you may think about maybe one day saving up for if it fits into the plan. But now I guess with the comparing what you have to others, and we're all guilty of that at some times, just think that sometimes people maybe focus on that more heavily than planning for the future and that kind of thing. And then that sort of creates this cycle of people going back for more. And then what has someone else got? And it's never really enough, is it? If the appetite can get bigger and bigger for those kind of things. So obviously they've made some sacrifices and thought about the future, which is really smart.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And it is a Real Estate Thursday. Get today out of the way and tomorrow, and we're back into another weekend. We are talking to Stephanie this morning, who is in Melbourne. She's a mortgage broker. Yeah, I want to get on to this one, Stephanie. Fully assessed pre-approval, especially for first home buyers. You know, when it comes to going to auctions, this is very, very important because there are two types of pre-approvals, aren't there?
Yes, that's right, Craig. There is the system-generated pre-approval, which essentially is just an application submitted, but it just runs through some very basic checks like credit checks, but nothing's actually assessed against policy. Whereas you've got the fully assessed pre-approval, which is essentially a full application assessed by an actual human, a credit assessor that has checked all income and everything against policy, bank policy. So everything's ticked off up front. When you're buying at auction, it's obviously unconditional, so you don't want to be in the position where your documentation and your income hasn't been fully assessed because it may result in a decline when you go to convert it to formal approval.
Have you kind of inherited some of these people that have done that where they're not fully approved and they've gone to an auction and they've committed that ultimate sin, and perhaps they've then said, because they might not have had a mortgage broker, and they've said, well, maybe we need a mortgage broker in the mix here. We've got ourselves a bit unstuck.
Absolutely. I have had people come to me in this situation and they are very stressed. So I usually can find them a solution, but some people are really stuck if they only really had one or two lenders that they qualify with. Yeah, there's a lot of moving parts in a mortgage application. So if they don't match up with a lender, it can be very stressful. Sometimes we'll have to go to like non-bank lenders, potentially higher rates, and yeah, they may fail servicing due to the higher rates. So yes, it can be very stressful for clients. Yep. And I have actually heard from colleagues of clients losing their deposit because they can't complete the purchase. They can't get approval anywhere.
That is really tragic. When people, first home buyers, are losing their deposit, they may have been spending 4 or 5 years saving up. There's a chunk of that money that they're just not going to recoup, and make sure that you are engaging with a broker, because I'm still amazed, as you are probably, that people are going about this on their own without taking professional advice.
I don't know why you would do that. Brokers are just really valuable. We can compare so many options. Yeah, I wouldn't do it on my own, that's for sure.
And it's free. It's not costing you anything. I think somewhere along the line, there's a short circuit wire that is telling them that mortgage brokers is something that they have to pay for. Now, let's have a look at a livability ranking, because a recent KPMG livability study ranks hundreds of Melbourne suburbs based on amenities, affordability and lifestyle. And it is showing that inner city and family-friendly outer areas remain highly desirable. And just a point in case here, a lot of your clients are wanting to buy in the inner ring suburbs, aren't they?
Yes, that's right, Craig. Yeah, I'm seeing more inner ring suburbs, middle ring as well. I'm seeing some of my clients, first home buyers, looking to sacrifice land and a larger home for perhaps a better location in the middle ring. So they're kind of shying away from the house and land packages and going for more established properties.
And what are you hoping to see in this calendar year, 2026? I've said this late last year, probably won't be as volatile as 2025. We hope not, but, when I said that, there wasn't much talk about the rates going up, but now there is.
Yes, that's right. At the end of last year, people were talking about potentially more rate cuts. So it is a bit of a surprise, I believe, the rate increases. However, I feel like it will just steady. I don't think there'll be too many more. I think it'll just remain quite steady throughout 2026. Well, I'm hoping anyway.
Yeah, me too. I am hoping, and all the very best to the mum of 7 children living in a tent. We'd welcome your emails with regard to that. Is that the Australia that you know and love? Stephanie, great to chat with you on a Thursday morning, and good luck for the rest of 2026. And thanks for coming on to the Real Estate Breakfast this morning. Appreciate it.
My pleasure, Craig. Thanks so much for having me.
Decode the property market with insider knowledge and insights to better navigate your real estate journey.
Well, fewer choices for buyers simply means there's a lot more competition for quality homes. Now, new listings in Brisbane are down around 10% over the last 12 months. But total listings, that's the total number of properties, they're down nearly 26% across the same 12-month period.
Really signalling buyers remaining pretty engaged in Brisbane at the moment. So if the sales volumes are down, this really does tell us that demand is still strong.
That's so true. So some could look at that as a top-line data point and suggest that the market is softening. However, when we break that down in more detail and we look at those auction clearance rates, this time last year, auction clearance rates in Brisbane were sitting around 50 to 55%. 75%, whereas already in February this year, auction clearance rates are between 69 and 70%, so they're holding a lot stronger.
We connect you to the best real estate information across Australia. The Real Estate Podcast.